Adding futures to your portfolio. Using futures to trade the night of the election. How traveling abroad has had an impact on this trader's choices for financial investments. And the importance of introspection for traders. All this today and more on the Futures Radio Show podcast with Arun Chopra, founder of Fusion Point Capital. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, please subscribe to Futures Radio Show podcast on iTunes, YouTube, Google Podcasts, Spotify, or Stitcher. This show is also sponsored by Trading Technologies, RJO Futures, and FTSE Russell. The Russell 2000 is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-mini Russell 2000 futures symbol, RTY, and Micro E-mini Russell 2000 futures symbol, M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. It's great to finally chat with you. It's the first time we're chatting. I've been following you on Twitter for some time. Don't know a ton about you, but I like your tweets. Read a little bit about your background. I mean, but a lot of interesting stuff we're going to talk about today. And I think we should just start with your background so everybody gets to know you a little bit. Tell us a little bit about yourself.
Sure. Yeah, well, no, and thanks for having me. I mean, I like I said, I likewise, and I was really thrilled just to be offered to be on because I've been following you as well, and a lot of stuff resonates. So my background is, I've been trading for a while. I basically started out long time back in the financial or before the financial crisis. In fact, .com, everything else. I was in biotech for a while as an analyst. Started there. Got into wealth management, and then over the years, I started building out active portfolios. And as you learn more, going through numerous cycles has helped. But nowadays, I basically manage active portfolios. I do, single stock, shorter term stuff as well, and then some futures mixed in too. And that's primarily it. I mean, Fusion Point as well. There's some research tools, and I have members that trade with me as well. So it's kind of a combination of everything, all time frames, long, short, stuff like that. But pretty structured. Over the years, I kind of built out a sort of formula around it.
Interesting. Well, let's start off with the markets that you're trading. Maybe we'll go back to what you're trading this year and bring us to what you're trading right now.
Yeah. This year has been a combination, and especially in futures, has obviously been, the S&Ps, oil, of course, gold, things like that. Essentially, what I tend to do is when the VIX is where it is now, or even higher, of course, earlier in the year, I tend to go to futures markets, and those are the three primarily that I trade, and then I trade around everything else, whether it's ETFs, emergings, and things like that. Right now, I've actually lightened up a lot. I think people have seen that maybe on the Twitter feed, but I was, pretty bullish out in March and April. I run a couple algorithms that kind of get a sense of capitulation, and that has been probably this year the best sort of boom for that tool. They all kind of go in combination different times. So, now I've actually lightened up a lot. I'm still trading intraday, S&P, oil and gold, things like that. But I will say it's been a lot lighter the last couple of weeks even. That's been mostly the story. And then I have my intermediate longer term stuff still kind of intact.
So for me, a couple of things you said I want to talk about. First is you said that a higher VIX brings you to the shorter term, and that brings you to futures. Mm-hmm. And I found that to be very interesting because I always say, every time the market starts to go down or the VIX goes up, it's a time that you want to be long CME stock or all the exchanges because everybody's going to be a lot busier. Right. And I think it's a lot easier said than done for a lot of traders to just make that switch. Okay, the VIX is, rallying. Now I move into start trading futures, even though you've been tell me what mostly been trading stocks probably or whatever else it is that you were trading. Sure. And then now you jump into futures and it's really volatile. Talk to us about how you kind of have that balance between the two.
Yeah, actually, that's a great great point. And actually, that's something that I hadn't really thought of it in terms of it's not something someone can just jump in and do. One of the big sort of turning points for me on that, I want to say 2015, but there was that moment prior to the decline in 16 when we had a lot of the news flow was Europe and Greece at the time. And there was a back-to-back, like 4 sessions where we dropped like 200 points back then. That was obviously more on the Dow, I want to say. Overnight came all the way back, engulfed it, did it again to the downside, and then did it again to the upside. And all of that happened, I want to say, somewhere in May. And then by June, and then we fell in August and all that. So around then is kind of when the market hadn't gone anywhere for 6 months. I had always, traded futures, but nothing in this sort of like, let me jump in and get a bigger sense of it in this sort of short-term time frame. It is way different if you haven't done it. The principles remain the same in the sense of you think about moving a stop, you think about, managing a trade. Are you going to add to it if it drops? Is it already a full size? If it moves, you take some off. Where do you move your stop, break even? All of that is the same, but it speeds up. And so for me, what I found is, right, so it's kind of like if you have that going on, then you say, okay, is there enough vol here to make it not even worthwhile, but because I can't figure out what's going on with the rest of the market during that time. Nobody can. And so that's the idea, is in those moments, you can kind of get a bunch of similar plays in the same structure, long, short, moving your stops, that you would in those longer term positions that you don't have to think about at that moment. And it's helped because most people don't realize what can happen in an overnight session and what can happen the next day. And it has no bearing on where you're going big picture, so it's a great point. I hadn't thought of it. I really hadn't thought of, it's not something you can just jump in and do, but I found that it's helpful because it's so liquid and sort of, you're able to maneuver. And if the vol is right, then you have an opportunity to say, I'm not paying tons of attention to my other stuff that often I'm using weekly levels for.
Yeah, I mean, I think one of the major benefits of futures is obviously the hedging if you have big portfolios. And I'm talking really the benefits of futures for those that are trading, stocks or ETFs. When we start getting busy, the futures really they allow you to be able to, like you said, capitalize on the shorter term movements to where either you're hedging against your bigger portfolio, you're capturing an intraday move to be able to say, look, on the big picture, I'm still going to be positioned this way, but right now, this is something that I see this could happen today, multiple days, and it doesn't. You could actually capture some alpha by trading the futures while not changing your other core position. But like I said, initially it's so much easier said than done, because I look at myself and I'm a futures trader and I don't trade any stocks. So when we get slower, I just take time off. I don't go and trade stocks. So for me, it's hard to see how someone does that, but I know that this is a growing part specifically for the futures industry. So I really want to focus more about how you do that, because it sounds like you're very structured, right, in your process. But how you go about your longer term stuff from stocks, and then how you take that same process. And I know that you said stops are the same, and like how maybe some of your execution may be somewhat similar, maybe the basics about it. But talk to us about how the actual strategy carries over to futures.
Yeah, absolutely. And in fact, it's great because I there's so many components to it. But one I was just thinking as you were mentioning, like, part of that is it's not just saying, hey, I'll go trade some futures now because the VIX is up. It's kind of like, okay, what does my longer term stuff look like? Generally, that's shaped out anyways. The market can adjust how much is long, short, where are you going? But ultimately, the factors drive that. I'll talk about that. But part of this first is just saying, okay, how much actually would go to that intraday work? Assuming you had all your stop stuff figured out, which already is its own risk issue. If you haven't traded that and you don't understand it, then you won't know what you're doing with your position sizing once you've even taken that sleeve. But part of this for me, the genesis comes sort of from a wealth management background a little bit, where, and before that, just getting clobbered in the past. I mean, I've been through so many cycles, and I went through this period where, you could make a ton even on a relative basis or in an absolute, either way, but you're young and you're kind of pushing and you've got two positions and you think you made it. And then you go through these periods where you just, you'll grind and give all that back. And I've done that. I've done that numerous times where you're like, okay, here's, these smaller option positions that are out of the money. And I might have even broke it up into pieces thinking I'm managing something. And in the long run, you're just killing your time. And so that led to a larger sort of journey of like, how do, individual positions tend to work. People have seen some of my factor work on single stocks. We break them out into growth strategies, value strategies, even those are broken out. So that's where the swing and intermediate kind of comes from. And it's structured in a way where there's diversification in that. If you look at the standard stuff, if you have over 25 stocks, you tend to lose the concentration effect. If you have like under 5, now you're in a world of randomness and luck, So it's a 15 to 20 something position thing. It moves. It has macro, long, short. I tend to be way more like, I am not fixated on, is this the most value stock ever? Is it in my strategy bucket list? Does the chart work? Does it fit in? So once you give yourself some room around every sort of discipline, then you can start to structure out where does your capital kind of go. And in that way, there's a longer term, a shorter term, and then this future sort of piece. And I had a tweet, this is a long time ago, but I had thought about it because I remember when I started this and I said, okay, now my portfolio is only moving, 3 or 4% a day, let's say back then, versus, you could do these crazy swings. And then I would say, is this really working? But you realize if you can do higher than the average, on the market on the up days, hopefully over the term, not destroy yourself on the down days, that active portfolio can do well. And that for me was kind of the bigger revelation into building. And so I wrote this thing about if you spend 80% of your time on your structure, right? It's not about my structure or anybody's, it's about what's yours. And as you said, like you have futures, you take time off when they're not. Yeah, during that time, I don't have an open futures intraday thing, but I am going back to some of the stock stuff. And the beauty is if you don't want to, like if you have the time to not, then that's great. But it fits in the time frame and the buckets. And so I just had said, if you had 80% of your time spent on what's your strategy and your structure, that may change, but spend that there, then spend 20% of time what you're going to put in it. The trade management piece and all that's a little bit different. But that to me, it definitely slows your return. It changes the nature of the game. But that is something that I think if I were going back again, I would have started that process way, way earlier.
Okay, so I understand your basis for your stock trading, your portfolio management. Mm-hmm. I want to talk about how you find the benefit and then going to the futures and just what your mindset is like. Does it change? What your process is? It sounds like it's going to be somewhat similar in terms of how your strategy is, but now you have to go in and execute a future, which is really very different. It's leveraged.
Very different.
So talk to us about how you're sitting there going, okay, now I'm starting to look at futures, and walk us through what you're looking at before you start to trade them.
Yeah, totally. So that's the fun, I think, is that, like now is a good example of that, where for me, the focus is on things that I wouldn't necessarily mix in with other parts of the portfolio. So there may be stuff that's stock or whatever, and it's saying this is a value thing or whatever, or this is the weekly level. And so that's that. And I found if you try to bring different time frames in, that's okay. But if you try to bring different or the same analysis to each, then you're going to screw yourself up, right? And I think that's where, the camps start to build, because people realize, wait a minute. So the stuff I'm looking at now, whether it be, what are the odds of a deal? What are the deal odds? What if there is no deal? Is it needed? Where do other people sit on that? I often say, I don't care what I think. I want to know what everybody else thinks, right? And so those are the kind of terms that matter, I think, now, especially when it comes to the futures thing. And as long as that doesn't, bleed into the longer term stuff, or I can say, look, this headline and this risk overall, for instance, now, whether it's the election, whether it's, the stimulus bills, whatever it may be, for me, other people's sentiment, just that last couple day move in NDX, right? That alone, for me, pulls me back and says, wait a minute, this isn't right. Right. So those are the pieces that but it doesn't mean that, okay, if that stuff crests or bases or flags or whatever, that you want to dump out all the other things. Right. And so there may be an overlap here and there where you say, okay, everyone's gone kind of wild in this space. I've got something in my intermediate I can get rid of. But the separation is definitely around that, what is the more, and you have to, it's almost like going to a different, school or something where you're showing up and you're like, okay, what's going on here? But you got to really segment that from, because, we know that, let's say there is no stimulus right away, or let's say the market, it actually does have an effect, let's say wherever people might be thinking, that quicker move in the futures can be plenty given how we're trading, especially with vol where it is. It may have no impact, or it might be the impetus to getting a deal that's going to help your intermediate term, right? So that triangulation is kind of always going. And to be honest, on the intermediate, you can just say, okay, the weekly levels determine a lot of that. My long short determines a lot of that. If I have a bigger outlook, if I say, hey, I don't, these headlines are not only going to be tradable, but they're not really predictable, outside of intraday or whatever, then you say, okay, I'll manage the longer term book a different way. But in terms of coming in right now, I think it's all that stuff we're looking at. I mean, I felt that the summer, I felt after June, July, we started to get that March, almost the inverse of March. And so you start to say, okay, what news that normally would be digested or is good starts to have a different effect, right? And I think it could be anything, it could be headlines about elections. It could be, vaccine headlines even now, I think, start to lose their efficacy. So that's, it's also, I think these are great points as to why it's really not for everybody. And it maybe speaks to why people don't, if you're in the futures thing, that's what you do, right? You don't want to think back on that. My journey is a little bit crazy in terms of coming out of the .com and, doing different parts of the market in different ways, wealth management. So I've just applied it here. But I would say, yeah, today it's all the stuff we're watching. And I think, there's probably more work to do in terms of some of that excess we saw, I would hope, in the summer, late summer.
So I think that the world has changed, and I think that what I'm seeing in the growth of futures this year and what I'm seeing with the micros and all of the new accounts that it's brought to trading, that more and more people like yourself, maybe not exactly to your journey. I think your journey is very unique, and I think it's unique to everybody. But I think that a lot of people are now utilizing futures, and they're, and it's one of those things where it's typically not everyone's starting point. Like for me, it was, I grew up in Chicago. The trading floors were there. That's not the same. No one's going to have that same pet that I had that doesn't exist anymore. But a lot of people are going to start with stocks, or they're going to start with crypto, and then they find futures. And like you said, you really have to have that. You have to have a section of your time allocated, and your mindset has to be a little bit different, because you go from one beast to the next. And I want to talk about, you mentioned the election. I don't want to talk about it politically, but I want to talk about the night of the election, okay? Let's play this game a little bit. You've got your portfolio. Who knows what it could be by then? Doesn't matter to me. I want to talk about you watching futures. And it doesn't, to me, it doesn't even matter who we would say would win or not win, but we know there's going to be volatility. And let's just say something happens. What are you doing in the future space?
I think back to the last election too, and we had that 800 point. I think it was 800 on the Dow, on the news, right? And the expectations. I was looking at the predicted markets, and it's not a political thing, other than it was 80. I think Hillary Clinton was at like 80, and then Trump was at 20 or something like that. And then of course the expectations were wrong, and so I think that vol picked up. But I look at that and I say, for me back then, I kind of anticipated a political shift back then. I saw through a lot of stuff and said, this can happen. I don't think it's an 80-20, and there's complications, right? Electoral college. And so we know there's contested situations. But back then, part of it was, okay, this is probably an overkill from, what the market was thinking. But you wouldn't have known that if it was 400 or 500 or 600. You just didn't know. I remember watching that in real time and saying there's just no way to know. So I think we all want to say, hey, how could you, could you have been short going in knowing that, it was going to be contested? I tend to look at it as twofold. One is on the longer term stuff, how do you navigate? And you saw people use their politics to screw themselves up. So people who were against Trump, let's say, all sold their stocks. I saw so many tweets about that, and then 2017 was a great year. And if you were for Hillary or whatever, I don't know how that, it's just that people bring their own politics in. So I think the first thing is you want to step back and say, okay, how does this really affect, the bigger picture, right? And that can be a combination, at least experience-wise, what I've seen is it's more of a combination of who has the House, who has the Senate, who has the presidency. The long-term rationale of what's going to work is going to be more fixated on that, even independent of like, oh, well, if Biden wins, it's solar or whatever. Then in the future side, I think it's you know, I've learned at least over time, I think it's like kind of like more harm than good sort of thing, which is, you know, you in a ball event, you've got to shrink all the positions down. You've got to say, okay, like if I'm going to take a couple swings here and there because everything's moving, I'm not going to get stuck in that revenge thing where, you know, all of a sudden you're just throwing out trades left and right all of a sudden in that event, you know. And so some of the things I've done for myself is said, you know, if I'm going to go into a higher vol event, whether that's a Fed thing or anything else, if it, you know, shrink those sizes, move those stops. If something goes against you, and it might be a larger cut than you expected because it's moving, so stop for a minute, right? Like take a second, back away. Those little things, I think you apply them. It's just an event like any sort of other one. I do think, yeah, this one is going to be tougher because we won't really have results, it sounds like, for at least a week or more, you know. And that's partly why I have the futures account open. It's partly why, because I don't like to necessarily, I would say for newer people too, you can look at the futures as a place where it is more liquid rather than trading some of these options, even the weekly options and those things. There's so much going on in those, whether it's spreads, whether it's implied volatility. I just like the ability to sort of know where my risks are on the active side. And I think that's the key, is this year is really validated that piece, you know, of having a future sleeve. You know, I think that's where, and I anticipate more of that. In fact, I've been kind of gearing up for that, which is part of saying, okay, lighten up the rest of the portfolio so you're able to just focus on this. If we keep this vol going, it might be a year where the VIX averages above like 20 something, you know.
Traders, we're going to pause for 30 seconds and we'll be right back. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Learn more at tryttnow.com. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. To learn more, please visit rjofutures.com. So let's just say, hypothetically, we go in there and whatever the outcome is, the market's down, and you look at the market down saying, you know what, I trimmed a bunch of my other positions, but at this point, I maybe want to start getting long some equities. I can't trade the stocks that I want because they're not open. Is that when you go in, and do you use maybe micros? Do you use a regular E-minis? What are you doing to like allocate to your overall position and say, hey, maybe I want to be long? Or let's just say that the market's up a bunch and you're going, you know what, I can't sell some of these stocks right now, but I look at the NASDAQ or the Russell or the S&P and say, maybe I want to short here. Is that what you do? Do you just offset it, or are you actually trading the the futures themselves, and just you're not scalping it maybe, but are you just trading that range?
Yeah, so I should say that. Yeah. So it's more like, then from there it's its own universe, right? So it's 4-hour chart down to a 1-hour chart down to like a half an hour to 5 minutes, something like that. And scalping would only come about if it's like insane vol and I'm just kind of sitting there. I mean, that's more of the times are there. It's, you know, even when I was traveling just recently, you know, the market hours were like 8 p.m. to 2 a.m. or something, you know. So in the weekdays, it was kind of cool to do that. But generally, it's its own universe, and I don't try to take that allocation into account. It's more like, can you trade off of these charts in a much more traditional sort of futures way? Because that's where my technical pattern and background and vol and cross-asset stuff kind of comes into play. You know, so I found that that works better than, let's say you go to an equity that you might think, okay, this has a decent thing, or for whatever reason, and then you start shrinking that time frame down, and then you're trading options on that or something. It's just a universe I've kind of moved away from and said, if I want to do that, I want to do that in the futures market, you know, and I want to have a control over how much goes into that space. I want to have control over, you know, how long those positions are held for. And I try not to, you know, generally, I would say this: if I was trying to connect those two pieces a lot and say, okay, I've got a lot of equity in the long-term book and this has been elevated and I can take some off it, then what I probably would have done is just said, okay, there's less intermediate risk on in general. You know, I think at some point, the bigger goal is to say, okay, that you're able to take advantage of where the action is and you're not messing up your mentality. Because what happens is as well, when you then go back to your longer term stuff, let's imagine the markets were open in election night and you have these equity positions, and the volatility just makes you do something that's totally irrelevant to the long term picture of what you're doing.
Yes.
Right on that side.
Yeah.
And that's where I think you can segment, you can kind of get that trade stuff out, see some volatility, have all of that go on, trade off news near term, and not let it bleed into your other stuff, which is where I think the timing, because at the end of the day, trying to time everything is almost impossible. So, if you do that on the intermediate stocks and things, you'll be shaken out before you know it. And that's why a lot of people, especially when they start out, they'll say, oh, I had that stock, or I had a bit of it, I sold it, or I wish I had kept it, or I meant to buy it. And it's like, yeah, you're kind of jumbling all your stuff up.
I like that. So you just turn a switch in mentality, and you take your strategy that's focused on futures, like you said, it would be 30 minutes or 4-hour charts, and you go in and you're trading futures, and you've already got that capital allocated to that time. And there are certain times, like the election, like a Brexit, like any sort of overnight headline or volatility cycles like we've had with COVID, and boom, you go in there and that's what you do. And then when it's not, it's back to doing your homework on your longer term stuff. And not that you're not always doing that, but you really separate the two completely.
Yeah, exactly. And I've thought of how to then go to one more bridge, which would be like, how do you take that future stuff and sort of do the intermediate and overnight swing and everything and carry that through the portfolio. But I think that's the real way, as you said, is like, you see that activity. March is a great example. I had a full thread on Twitter about it, and that's when I was traveling, actually. And I think I was midway. I was trying to get back, actually, because the virus and everything. But regardless, it was like there was like 110 handle day or something like that, and I had it all there. And you just like, that's where the action is, right? And but you make great points. I hadn't really thought of it to get here, what it kind of took. And who it's right for. And I also think you risk trying to step in other people's ponds, right? So if you don't know, and I will say when you turn that light switch on, you say, okay, I'm in here now. I do take some time to get a feel of what's the vibe. Throw a couple ideas out. Did they work? Did they not? And it is not to say that it's doable every time. There are many times you get pulled into that world of, okay, I'm on the wrong side of this, but it has to, that's where I've tried to put these conditions in place of stop if here's your daily risk or whatever. If you've gotten near it, halfway it, stop, take 10 minutes, whatever it is, to kind of those general things. But it's a very good point that it does take time and it's not for everyone. And I would say that even then, when you jump over to the next world, you have to have a sense of, okay, like what's been going on what are you guys looking at? What's driving what? What's the sentiment overall in this space? And then from there, you can go back to your constructs of what do I think? How is that going to be different? And what would prove to me that I'm right about that? Then you get your comfort. And then, in a perfect world, that's kind of the transition.
Yeah, I look at myself and I say, I developed an edge in day trading, and I've been doing that for 20 plus years. And over the last year, I've actually tweeted about this as well. I've put a lot of focus now to become more of a swing trader. This year was perfect example to me to where I needed to expand into having some core positions on, some smaller positions on for swing trades, because a lot of these moves were overnight or they were happening throughout the day into the night. And I was of the mindset of in and out all day. At the end of the day, you're done. And just for me being in the future space, having my experience, and I look at myself as a beginner every day in day trading because I always want to be able to learn and get better. But when I went into swing trading this year, I was like, you're going to make mistakes, man. You just got to keep pushing forward. And it's just a different mindset. And a lot of the skills I learned and a lot of what my edge is in day trading carried over, but not all of it. I just think my learning curve was a little bit shorter, and I've made a bunch of mistakes even just this past week. I was adding to stuff, trying to press a little bit really close to a winner, and all of a sudden I screwed up with the ads. I'm like, what are you doing? Intraday that works sometimes, but when you're looking at these wider ranges, and I was in a gold position, and I tried to add it to it a little bit, and then it came right back in. But that taught me something about gold and what I should do the next time. But I tweeted about this and said, I'm making mistakes, but I'm okay with it. And I love how you really, you have committed the two independently. And I think that that's just a very important thing, even for myself with my swing accounts versus my day trading accounts. I like having separate accounts because, once again, it's different progress. It's different. Just a lot of things are different about it. But I want to move on and actually talk about something else that you've mentioned a couple of times.
Sure.
You keep saying you were traveling, and I know that you've traveled abroad a lot. And I know that that's a big part of your journey. I've seen you tweet about this. I've heard you talk about this. And I know for myself, when I started to travel, it really opened my eyes to markets in general. You see global markets and what they're like. I remember the first time I went to Singapore, I thought it really opened my eyes to, you hear about Singapore, and then when you're actually there, you see things that are happening. How much has traveling had an impact on you and your trading career?
Yeah, well, and I was going to say too, I noticed that, by the way, the swing trading tweets you had, and I was going to say the future stuff as well resonates so much because it comes through all of your stuff. So whether it's the psychology of everything, managing that, and then the range bound stuff and adding in core, I think that's all part of it because you notice where the benefits are of each. And then you say, okay, like even if you trim some, fine. If it goes right through, then you've got the other portfolio. And I think it's kind of that idea that you can't have it all, right? But if you can have some and do it over and over again, mentally ironing out some of those things that other people don't get the opportunity to because they have to be right every single time, then I've just found over time that tends to be more sustainable. But with respect to traveling, yeah, I mean, we were very fortunate to kind of, go places as kids and things like that. And then obviously as you get older, I studied abroad as well. And I don't, talk a ton about it other than it's really the different educational structures. I studied here, of course, in the States, and then I studied in England as well. And I remember going there and then just learning like, okay, your work, although it shows what you learned, it's not critical thinking. And that was a big thing. I actually did poorly there at first till I figured this out. And it really drives your thinking overall. So that coupled with, I think, seeing, different markets and people as well, right? I think like we're having somewhat of an awakening here where we're kind of moving away from, I don't want to say academia altogether, but this idea that like, we know that great innovations or things and ideas, they come from all over. And so when you build all of that around it, you start to, I think, just being more flexible. And again, I'm probably speculating, hopefully not projecting, but I would say that, you start this journey and having gone to some of this academic stuff, there's this fantasy world around like if I read these books and I study these formulas and I'll understand how this works, and if it doesn't, then everything doesn't. I just think there's so much more to it. It's probably rooted a little bit in the art stuff, and I've mentioned my brother's work and the work we've done in film, and so I think that has been helpful. I can recall growing up as a kid, we would travel in Asia and India and things like that, and I remember when they first got cell phones, and those technology transfers, and how they didn't have to build landlines. And these, or the currency, I'll never forget, it was 8 to the dollar, then 16 to the dollar our next trip, then 32 to the dollar, then 64. And so those things sort of subtly hit you in certain ways. And then you kind of have to, I think it's the bigger picture is all about being well-rounded within, that, not that you have to be there, but you have to mentally, and it ties right back to the market in terms of this humility of knowing that you don't know much of anything. You just hope to be in the right places at the right times and respect those things that, even if you disagree, there's so many things out there that I'm like, this makes no sense. But then you kind of say, okay, what is working for others in that space? And so I think seeing the world, helps in that. I think you don't have to necessarily, but I think there's a level of recognition of, of that this is a big thing, that the market, and then we always say it, right? Well, I'm at the behest of the market at this point. The market knows. In some respect, that's kind of the element of it. I look at the Indian market. My gosh, since U.S. has done well over 20 years, but that thing went from like 3,000 to, whatever it is now, 40, 50,000. And I've seen it in my cousins' lives, all the new changes. So I just think it's part of the journey. And I would contrast that with somebody who might come in and say, either I have this formula or I have this trend line, or I have this view on an asset and I know I'm right. I know that's an extreme, but I think that those are kind of the wings, right? And somewhere in there is the reality. And where you fall in it, you see people who don't even trade, right? They just focus on different things around the world or whatever, But for me, I would say it somehow ties holistically back into this, we're all sort of, everybody has an opinion on a different thing. The question is, do you have a portfolio that's profiting from some of these things? Yes or no,
Yeah, I mean, there's so many different things I could say that traveling has taught me, and one of the things I think just in general is when you go and you see people from different places, even within the U.S. or obviously we're talking more global, you and I right now, but you really get a sense of like people are always working and trying to make things better. So in an overall sense, I always think to myself, why be bearish for a lot of these things? I think that so many people are so confined to their spaces and they follow certain people on Twitter or whatever. And it's just like, there's always like this bearish sentiment. And I'm thinking to myself, when I started to see the entire world, I was like, you're going against everybody. It's like, do you really think that's a great trade? And I'm not saying at times it isn't. I've made great money in my career short. Some of my best days have been on down days. That's not what I'm saying, but it's like you see some people with this overall always bearish mentality. And you're like, I understand the Fed. I know people are going to send me messages about this, but I'm just saying in general that you see that people are out there working to make the world better, like when you're actually going out there and just seeing different countries, and like I said, even within this country, and that really opened my eyes. And here's someone like me who always loved to be short the S&P, and I'm not going to say that it changed me totally when I came back from a lot of those trips, but it did open my eyes to things. That's just one thing. But something else I actually want to get to is that you're an indie film producer, and I saw this in your Twitter, description, right? Whatever they even call them on your Twitter page. And I was like, what? I don't know that I've ever really seen you tweet too much about this at all. Actually, talk to us about that aspect of your life.
Yeah, totally. So in fact, it's happenstance. So it actually ties a little bit back. I thought you said that perfectly though too. That really is that there's people working to make things better every day. And I think that's, shorting intraday or shorting even over a bear market. I've been through, you've seen it, whether it's multiple compression or whatever, and monetary systems, so many debates. But I do think that element is there of humanity and what people are trying to achieve and the spirit. At some point you cross over into you're shorting that, right? It's not, of course, on a single day or whatever.
Exactly.
But I think that ties to the film thing, which is that for me, it was happenstance. It was, I've seen it. So some people know, but my brother's actually a director, and he started out in the East Coast, and he was doing very small independent films. And so the way this came about was I was actually just finishing school, pre all the financial stuff, been market, et cetera, but not the CFA stuff or whatever. And I just basically was at biotech, right? And he said, hey, you want to come out and check out this thing we're doing and, help with this? So I flew out there and I said, let me see. And we shot this full feature film. We had to get money raised. I put in, we all did. And it was a full length, 80-minute about deal on film, and it got into Sundance. And so that was 2006. Yeah, it was crazy. He was at Columbia. He's really good at what he does, but it just took a long time. So he was doing all indie work. And so then that 2006 Sundance came out. We traveled for a year. People used to ask me, is it like Entourage or whatever? It's kind of cheesy. No, it's more like really exciting. Is you get to go to all these film shows and see these films, and so that then led to about 3 years ago. I want to say 4 years ago now. We did another one. So this time a much larger budget, raised a bunch of money for this one, and that one was Best Picture at LA International Film Festival. It got picked up by Netflix through a distributor. It's still kind of in the thing. He's got one on there now. So that was the second one. And then now just recently he's moved on to doing this. He's doing a show actually for Netflix, which is a season 2 that'll come out soon. That I probably will put on my Twitter because I want people to see what he's been working on. So I did those 2. We raised money for those, produced them both, was on set for those. Amazing sort of 50-person crew in the second one. And that is an aspect of something I want to do more of. There's nothing like, I've talked about at least the production aspect. It's an amazing collaborative thing. Those who know me, if you're out or something, it's very little finance, like what's happening. It does get in there what the news is, but it's storytelling and having fun. And so that film thing allows you, and it's amazing the process where you're like, okay, we got to get this shot. How does this relate to the story? Where does it fit into the thing? Did that work? And it just becomes a movement to make a story. And then when you see it, and so it is, I plan to share more of it, but it was very natural. And the last piece, speaking to how this connects to the world, is that watching his industry change is that thing. Like, we could talk all day long about content and profitability and all these things, but I will say, watching the ability of content creators and artists and viewers to open up the world to see these things is a dynamic thing. And it's exciting to see. And that, yeah, that's where I would love to do more, in the future. That's definitely something that, it comes every 2 or 3 years, basically. It's a long wave sort of process to write, develop, and produce.
Trading is a journey of oneself, man. It's amazing how many things tie into it, our different experiences in life and how they have impacts on our trading careers. Obviously, it's a trading show, so I'm referring to that stuff. But it's and for me, getting into podcasting and then doing some video stuff that I've been doing has just become a passion of mine as well. I love it, and that's why when I saw that you were really a producer, I'm like, that's really cool. I'm like, I can't wait to pick his brain about that. And there's a final thing I really want to talk about before we get into rapid fire today is you and I had a little message back and forth about this with introspection, and I think that this is what a year for introspection, because if you just think about, I actually mentioned this when I was on, I don't know if it was a podcast or I was doing a webinar back right at the beginning of COVID, and I was like, this is just a time for introspection. That's why I wanted to kind of talk about this. I think that a lot of thinking this year, a lot of time at home, a lot of time alone in the mind. So talk to us a little bit about your experience so far this year with COVID, and talk to us a little about introspection.
Yeah, totally. And I would say like that, I noticed right away the videos you were doing, sharing your experience and your journey. I mean, I tell you, that's why I was really excited when I heard, because I tell you, like, it resonated immediately. And also not just what you were saying, but the way in which you're doing it. You're just sharing it through the platform, and that is like, it's just invaluable. So I think that the journey piece of it, I think there's 2 layers to introspection. One is independent of the virus. There's their own introspection inside of trading. So I do a lot of kind of joking tweets. I think, some people take them one way or the other, but hopefully those who get them kind of get a sense that this is because you have to be able to know yourself to kind of laugh at everything else along the way. And part of knowing yourself is really being deeply honest with kind of why you are sort of the way you are. And from there, you can start to build out different things. I can tie it to trading, which is to say, like, for me, I'm really not a good trend trader. I'm just not. And I've worked really hard at it. And I put in fact, the funny thing is these threads on Twitter have helped me become better. And I think I mentioned that before, but it was like, the CGC trade or something that I stayed in. I did because I was threading, and it helped me kind of get some of that out and let it kind of just roll. But my nature is not to follow the trend. And I know why that is, specifically for myself. And I can tie that to, like, my own background, which has nothing to do with markets. Right. And so I know what my headaches are with trend trading. It's very personal, right? I know why I'm so contrarian. I know why I was able to see the March sort of capitulation for what it was. At the same time, I know when I get clobbered by that strategy. Like, I know where my weaknesses are in terms of, and I know how to mitigate that within not pushing on that if it's going against me, but I can't just mitigate it, right? It's not like a switch because it's innate to me. And so all I can do is analyze as to why that is and try to work on that. And so I've tried. I mean, I think you mentioned it too, whether it's doing more core and how you grew up in futures, intraday, and those things. You can't get there until you do that piece of it, in my opinion. Maybe you can, and maybe you're a robot and can do all your risk management perfectly. But I think most people, right, your behavior will come back and bite you. It might not, and the worst thing is it might not bite you today. It'll bite you when it really matters.
Yes.
Right. And so, right. So that introspection piece is, to me, is like a deep journey. And I notice it when I see people who know themselves. I know right away. I don't say, oh, this person is the best trader ever. I say this person can trade. Right. I know, they have experience. They know what they're doing. They have a sense of what they, can achieve, can't achieve in the market, and kind of stick in that world. And then you see those that are willing to work on themselves and become better. And so that is primary, I think. And then secondary with the virus, at least for me, I will say we were traveling. We're lucky to get that last flight home. They had to shut production for the new show. Just really fortunate to be back and like be safe, I think. And, all the politics surrounding it aside, it's funny, it wasn't tremendously overweight, but lost a bunch of weight, kind of just working on this new tool that we're building. And in some way it's almost contrarian. My recommendation for everybody, because I'm facing it like we all are, and I have my moments, but I would say that, if you're younger too, especially, like, you want to use this time figure out what your blessings are in this moment and use those to do things that you wouldn't be able to do because you won't get that time again. And as a true contrarian, at least in me, I know kind of why I am this way. You want to come out of this having done things that you look back and say, hey, I that was something I can look back on and value. Because in the moment, it's everyone has a different situation. So that's how I've approached it, and I know it's probably different for everybody.
Well said, my friend, and really having a lot of fun with this conversation today. But we are not done yet. I have some rapid fire questions next, if you are ready for those.
Let's do it. Yeah.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. Arun, first question for you. What trader has influenced your life the most and why?
So I would just say, outside of traders specifically, the stuff that influenced me, I think I mentioned Richard Russell, and I would say like Poplava and Yamada, a lot of the old school letter writers, they got me thinking a lot about markets, a lot about intramarket, a lot about how things move together. And I would say markets have changed a lot, and a lot of those relationships have sort of broken, but I would say that those are the types of people that got me really interested in how finance and sort of capital markets move.
I rarely chime in on the rapid fire segment, but I'm going to tell you, Richard Russell's letter was the best trading letter of all time. I don't even think no one's even close. That's my opinion. So
I agree.
Anyway, I just wanted to chime in there and say that.
It's awesome. No, it's perfect.
Yeah, no, he was great. Next question. What was one of the hardest things for you to overcome in trading?
Yeah, I think a lot of this was, for me, it's been this journey of tying, almost like your up and down days to your own personal sort of worth and feeling. I think that, and it's always a challenge, but I think that, there's numerous ones, whether it was portfolio management, all the other stuff, but I would say primaries, I think a lot about these things is like trying to separate yourself from your intraday or your current performance to how you view your own self going forward throughout your things. And I think the more you can do that, the more you can have sort of this, real opportunity set and again, to kind of know yourself.
How has your trading process evolved over the years?
Yeah, this is like, it's gone from what's the next thing to move that I think and like I read about to, this whole structure and the tools that come along with that, the ability to break down factors in stocks, the ability to trade futures. There's more liquidity and even options. It's just grown. It's nothing like, what's your next idea? It's a whole approach.
What is one attribute you believe every trader should have?
Yeah, I think you have to be independently minded, like a critical thinker, and be very open to, you just have to be a flexible person. Your mind should be a sponge, and you should be able to know that you don't know, and I think that type of independence and approach is very critical if you want to kind of survive.
Favorite book about trading?
Thomas Howard has one I posted on my Twitter recently, Behavioral Finance. I think I'd stick with that for now. I'd have to think, but I would say that one is very much about anything that deals with what we've been taught that isn't. So he shows how volatility is actually a benefit, things like that. That's probably what I've been most interested in this year.
If you had to pick a profession other than trading, what would it be?
Oh, it would be film. I would do whatever on a film production set, and I've done pretty much every job on the set actually, but it would be something to do in the creative world and arts and collaborative, something where you kind of hang out with people all day, make something cool, and then also, hang out in the evening, things like that.
Best piece of advice you ever received about trading?
The best piece. I would have to say, man, that's a tricky one. I think the best overall piece was it goes back to being sustainable versus, so I think I see this now, which is nowadays people will say, hey, I said this when someone said that, or I told you this, and I used to do that. And I remember one of my first, I think at biotech, my first boss actually looked at me once off some trade that had worked. And I remember the vibe was, okay, it's one sort of deal. And I thought that doesn't make any sense. So I think that the advice is find something that is, it's sustainability and it's an overall approach. I think that is, and I would say that's what I would share back is if I could go back, you have all the tools now. Think about yourself, think about your path, think about what fits your style, and build something that doesn't, because then you won't say, hey, I called that. That'll just be another piece of the puzzle that's kind of working for you at any given time. I
love that answer. It kind of feeds into this next question. If you could give the younger you a piece of advice after everything you've learned about trading, what would it be?
Yeah, it would be that combo. It would be capitalize. I don't think people talk enough about that. Is be capitalized. Make sure get to that place where you are. Otherwise, do it in a way which you're learning, and then build an approach and build one that fits your style. You know yourself, and then you can build on that going forward. And spend more time on that. Don't worry about making a killing on a trade. You see that right now going on with so many new people. They won't survive. And if you can get knocked out in 3 days or whatever, then you're not going to survive. You're just not. So if you're serious about it and you think it's something you want to do, and I've been trying to be more discerning now actually with who I kind of work with and things like that, because I've been thinking more about this, but it really, the younger me, the churning years, go back and come up with a process, do that first.
If you had an elevator pitch me your edge in trading, what would you say?
It would be that unique background of how this all came about. And it would be a combination of my personal self that I know to be more independent and sort of contrarian in nature, but it would probably be more so knowing that about myself. So I don't think my nature is necessarily the one. There's so many, and there's plenty that are much better, and there's things I can't do that I'm sure others can innately do, but I think it's knowing that about myself.
Last question for today. What's your favorite thing to do when you're not trading?
Yeah. Nowadays, I don't know, right, with the virus, but I would say, it really is being on the set or being with my family, things like that. It changes over the years and it depends on the markets, but favorites, it definitely is doing things that are just outside. You can throw travel in there too, but it's things that just can help you grow and you don't need market time. It's not about that at that time.
Well, I got to tell you, Arun, this was a lot of fun. I'm so glad you and I were able to do this podcast together today. Like I said, I've been following you on Twitter for a long time. We've had some chat messages and stuff like that, but really got to know you a lot today. Love your backstory. Love your whole attitude towards trading. Thank you so much for coming on the show today. Where can people find you on Twitter, and give us a website to check out?
Yeah, definitely. And first and foremost, thank you so much for having me. I'm a huge fan. Trust me, when I heard from you, the first thing I mentioned my family. I've been following you, and I think that what you're doing is the right. This whole conceptual overall arching thing. I can't imagine if we had this, when I was younger. So, thank you. And well, the @Fusion PT Capital is Twitter handle, and then my website is fusionpointcapital.com, and I've got some of the tools that I run there. Do some research as well. And usually on Twitter, honestly, that seems to be the new place. So
it's the place, man. The place to be. Everybody, you got to check out Arun on Twitter. As you could tell from just hearing him today, he's a really good guy, knows his stuff. Thank you again so much for coming on Futures Radio Show.
Definitely. Thank you. Thank you so much for having me.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.